Hey there, everybody. Thomas Wood with Basecamp Trading. It is Friday, July 7th, and we're going to take a look at silver. And we're going to continue on with the Mistakes Traders Make series. And today what we're going to talk about is not fully understanding the risk involved in trading. So you can't see it on the chart here because they already applied a correction to it. They corrected the price up. But last night, silver had what is called a flash crash, okay? What that is the price fell 13, I think it was a little under 13% or so in about 22 seconds. And I just happened to be sitting here watching it happen while it was going on last night. And it dropped all the way down from over 16.1 all the way down to, I think it was 13 or 14.3 or so last night. So a huge move down, and it happened almost instantly, just in a matter of seconds, and then rebounded back up. But that type of move on one contract alone in silver is several $1,000s, nearly $10,000 worth of a move. Okay, so the reason I'm telling you this is because there was an individual that I'm working with that he actually ended up having a margin call happen. And he had a margin call because he was in silver at the time. And when they filled his margin call, or when they closed out his positions because of the margin call, it filled him at the exact low, and it took out a huge ding on his account. Okay, now it's been corrected up. CME changed it. But my point is, you need to be aware of the risks involved with trading, that there are very volatile times. And there's things like when the Swiss franc was unpegged from the euro unexpectedly. And that caused, in the futures contract, something like a $20,000 per contract move in one day. Okay, that's huge. So there's things you can do to protect yourself, but if it's a flash crash, you're going to have a lot of slippage. So even putting a stop in place is not necessarily going to protect you. So just be aware that when you're trading, there's always a certain amount of inherent risk. And it's a probabilities game. And you can be long-term successful trading the probabilities, but there's always a possibility of something like this happening. And this is why a couple different things. Number one, you don't ever over leverage yourself in any one position. Because if you over leverage yourself in one position, and that one position happens to be the one time in a million that you get a flash crash, like the Dow in 2010 or like silver last night, you blow up your entire account and game over. Number two, that's why you never trade with money that you're not willing to lose. You got to trade with risk capital. And that ties into a whole nother thing about emotions, because when you're trading with less emotion, or when you're trading with risk capital money you're fine with losing, or it's not going to hurt you if you lose it, then it takes a huge emotional burden off of your shoulders and makes it easier for you to think clearly and place trades methodically and mechanically instead of making emotional decisions. Okay? So just be aware of that. There's a whole lot that goes on with trading. There's a lot of inherent risk. Again, it's a probabilities game. The likelihood of this happening, very slim. That being said, it does happen. It can happen. Never over leverage yourself on one position, because you don't want to have one oddball thing happen like silver and blow up your account when you can have a fraction of that position size and then continue trading and just have a big ding in your equity curve. Okay. The other thing is, if you have an account that's smaller, you may not want to trade something like silver. Silver is a highly volatile market that's relatively thinly traded. It doesn't have a ton of volume compared to other markets like gold or the S&P or something. Okay, so keep that in mind as well. Stay away from those bigger markets if you're trading smaller accounts. Build your account up trading smaller markets. Trade things like platinum, or trade something like bonds or 10-year note or the S&P or the Dow. Okay, where it's a smaller market, it's not going to hurt your account nearly as much as something like silver could. Alrighty, so that's all I have for you for today. I will see you all in the trading room bright and early on Monday morning. Have a great weekend, everyone. Don't forget to like and subscribe. And until next time, happy trading.